Welcome. If you own a business, work for yourself, or earn significant self-employment income, what I'm about to share with you in the next few minutes could save you more money than anything your CPA has told you this year. This is the cash balance plan, and most people have never heard of it. Let's get into it. Here's the reality. Most business owners are doing one or two things. They're either paying a massive tax bill every year and just accepting it as the cost of success, or they're maxing out a 401k, putting in $23,000, maybe $30,500 if they're over 50, and thinking they're being smart. But here's what nobody told them. The IRS has a vehicle that allows certain business owners to shelter up to $300,000 or more per year from taxes, legally, in 1 year. The 401k isn't the ceiling, it's the floor. Think of it like this. A cash balance plan is a hybrid between a traditional pension and a 401k, but with a dramatically higher contribution limit. Here's the simple version. You set aside a large portion of your business income into a protected retirement account. That contribution is fully tax deductible to the business. The money grows tax deferred, and the older you are, the more you're allowed to put in. The IRS designed this for business owners who want to build serious retirement wealth while reducing what they owe right now. It's been sitting in the tax code for decades. The wealthy have known about it the whole time. Now let's talk about who this is actually built for. Number one, you need to be a self-employed or own a business. Sole proprietor, LLC, S Corp, C Corp, partnerships, all qualify. Number two, your net income needs to be at least $100,000 a year, with the sweet spot really starting at $150,000 to $200,000 and above. Number three, your income needs to be consistent. This is critical because once you establish this plan, you are required to fund it every year. The IRS treats this like a commitment, not an option. And number four, you need to be motivated, not just about retirement, about stopping the bleeding on taxes right now. Here's where it gets exciting, especially if you're in your 40s or 50s. The older you are, the more the IRS allows you to contribute. At 40 to 44, you're looking at sheltering roughly $100,000 to $130,000 per year. At 45 to 49, that climbs to $150,000 to $180,000. At 50 to 54, we're talking about $180,000 to $220,000. And at 55 to 59, $230,000 to $280,000. And if you're 60 or older, you can potentially shelter $300,000 to $350,000 or more in a single year. All of it a business deduction, all of it growing tax deferred. The government is essentially rewarding you for catching up on your retirement savings the older you get. Most people never know to ask. Now let me make this real for you. Meet Marcus. He's 52 years old, owns his own business, earns $350,000 a year. He's been maxing out his 401k, putting in $30,500, and his CPA has never mentioned anything else. His tax bill? Enormous. Now here's what changes when Marcus sets up a cash balance plan. He contributes $230,000 this year. That $230,000 comes straight off his taxable income. At his tax bracket, 37% federal plus state, Marcus saves between $85,000 to $100,000 in taxes in 1 year. Same income, same business, different strategy. That's not a loophole. That's the tax code working exactly the way it was written for people who know how to read it. Now, here's where it becomes generational. Most people think the story ends at the tax savings. It doesn't. That's actually where the real strategy begins. Here's the power move. Step 1. You use the cash balance plan to shelter income and build a significant retirement account. Step 2. You take a portion of those tax savings, money you would have sent to the IRS, and redirect it into a permanent life insurance policy or a properly structured annuity. Step 3. Now you have two engines running. The cash balance plan is building wealth on the tax-deferred side. The life insurance or annuity is building wealth on the tax-free side. One fills up. The other one guarantees income you can never outlive and passes what's left to your family completely tax-free. That's not just retirement planning. That's legacy architecture. You may have heard of the Rockefeller waterfall method. The idea that the wealthiest families don't just accumulate wealth, they design systems to perpetuate it across generations. The cash balance plan is the engine that builds the mountain. The life insurance trust is the system that makes sure it never erodes. When you combine these two strategies, you're not just planning for your retirement, you're building something your children and grandchildren will still benefit from long after you're gone. That's what the top 1% have always done, and now you know how. At retirement, your cash balance plan has to go somewhere. Most people take path A. They roll it into a traditional IRA and spend the rest of their life paying taxes on every dollar they pull out, hoping the market cooperates and praying they don't outlive the money. The wealthy take plan B. They strategically reposition those funds into a Roth conversion strategy, into a life insurance policy or a guaranteed income annuity. Now, the money that was taxed going in comes out tax-free. The income is guaranteed, and whatever is left transfers to the next generation without probate, without estate taxes eating it alive, and without a phone call to an attorney. Plan A is what most people do. Plan B is what we help you design. Let me ask you a few questions. Do you own a business or earn self-employment income? Are you over 40? Are you earning at least $150,000 a year consistently? Are you paying more in taxes than you think you should be? Is your CPA the only person you've ever talked to about this? If you answered yes to most of these questions, you are exactly who this strategy was designed for. And the window to set this up for your current tax year closes at the end of the year. This is not something you want to put off. Before I tell you anything else, let me tell you who I am and why I'm qualified to have this conversation with you. My name is Leandre Boone. I'm the founder of Buckeye Financial LLC. I'm a former Ohio State defensive back and a member of the 2002 BCS National Championship team. I spent over 20 years in the insurance and financial service industry. I'm licensed across 8 states, and I built this practice on one mission: to bring the strategies the wealthy families and businesses and business owners rather have always had access to directly to the people who deserve them most. I don't just teach these strategies, I use them. And I'm here to make sure you have the same access the top 1% has always had. So here's your next step. It's simple. Book a complimentary retirement protection review with me directly. We will look at your income, your business structure, your current tax exposure, and I'll show you exactly what's possible for your specific situation. No pressure, no obligation, just clarity. The link on the screen is right there, and the QR code is right there as well. Scan it right now while you're watching, because the people who act on information like this are the ones who build something real. I'll see you on the call. The information presented in this video for educational purposes only and does not constitute tax, legal, or investment advice. Please consult a qualified tax professional or financial advisor regarding your specific situation. Buckeye Financial LLC is licensed in Virginia, Maryland, North Carolina, South Carolina, Arkansas, Texas, Ohio, and Tennessee. Thank you for your time.